As the stock market rallies into all-time highs due to AI tailwinds, another big buzzword is now the talk of the town.
Stablecoin.
Hey, the hype lately does seem to be shifting somewhat to stablecoins.
Promising a future where money can be moved through a decentralized and cost-free means seems amazing. But is this future here? One of the companies looking to change the financial industry, Wise co-founder and CEO Christo Carman, thinks their company's current method can provide this service at a better cost while being more convenient. So how has Wise positioned itself to become the low-cost and convenient provider of foreign exchange without the help of stablecoins? Let's find out. But before anything else, to those who are new here and would like to support this type of content, please like, comment, and subscribe so I can create better content for all investors out there. So now, let's start by doing a quick overview of how a personal problem bloomed into the idea of Wise. Co-founders Christo Carman and Tavet Henricus are two Estonian friends that needed to transfer money from pounds to euros and vice versa. As they both realized that foreign exchange fees really took a chunk of their money, they invented a workaround by moving their money for the other person's benefit. To execute this, they used their own personal bank account to transfer money locally to the other person's local bank account. In this way, both parties were able to avoid the unneeded foreign exchange fees. This simple workaround sparked the idea that there could be a better way to exchange money into different currencies. And voila! Wise, previously TransferWise, was created. As of today, their goal is to achieve money without borders. They've been doing this by disrupting the correspondent banking system through creating their own railways to transfer money globally. Before Wise, the only way to transfer money globally was through the SWIFT network. This messaging network connects financial institutions around the world with correspondent banking partners in foreign countries. Since a majority of financial institutions do not allocate resources to expand abroad, they have to rely on that network to do foreign exchange. This leads to unnecessary processing fees and delayed settlement due to multiple middlemen being involved with the process. With Wise, financial institutions bypass the old route and are incentivized by the low cost and convenience that their railways provide. What's amazing about Wise is that even though they are disrupting the correspondent banking system, their operations have led to partnerships with SWIFT, 100 plus local banks globally, payment giant Visa and MasterCard, and 6 connections to central bank payment systems around the world. Now that we have a basic understanding of how the company was made and how they have been expanding, let's dive into their business model and how it creates a competitive advantage for the company versus old and incoming competitors. Wise operates in two main segments, their Wise app and Wise platform. As they operate digitally, they do not need a physical location to receive or transfer money for their customers. Old competitors such as Western Union or JP Morgan have the additional cost of maintaining and building new locations to operate their business. This creates a huge cost advantage that allows Wise to allocate their capital into creating a better service for their customers. This means that they can focus on having the lowest take rate on average and being the most convenient service while still having a profitable business model. To push this point forward, the World Bank reports that the average take rate is around 6.35% compared to Wise's average of 0.53%. Additionally, 63% of Wise's transactions are completed within 20 seconds and 94% within 24 hours. The slow take rate and speed creates organic volume flows for their Wise app as customers and businesses recommend their products and services to their peers. As the company takes in more volume, they are able to create massive operating leverage as their costs decrease even further. As an example, their gross margins expanded about 10% in 2023 on top of their transaction volume growing by 37%. So as Wise's transaction volume grows, they are able to lower rates even more, and then the cycle goes on. As for the Wise platform, this has the same benefits as the app, but this service caters to all financial institutions that cannot allocate resources into reducing foreign exchange fees. They have positioned themselves in the financial industry similarly to how TSMC positioned themselves in the chip making industry. TSMC focuses only on manufacturing chips and prioritizes becoming the best in that. They do not participate in designing these, but due to their focus, they became the preferred manufacturer for chip designers for brands such as Nvidia, Apple, and AMD. This unlocked immense value for the chip designing industry as they could allocate their resources on what they do best, while still benefiting from the best manufacturer in their industry. Wise platform has the same effect as it lets financial institutions focus on what they are good at, which is lending money while providing a better forex service for their customers' needs. Now that we understand what makes Wise competitive, let's dive into the numbers that prove these advantages. Similar to my investment process in my UNH Quick Dive video, I will be showing a relative analysis between publicly traded peers in their industry. As Wise affects both banks and remittance companies, I will do two separate relative analyses to give a clear view of the company's performance. For banks, I will be focusing on deposits growth, while for remittance companies, I will be focusing on transaction volume. Additionally, I will also be looking at operating ratio, return on tangible assets, return on equity, and adjusted price to earnings ratio for both comparisons. After comparing these companies, what's crazy to me is seeing how similar Wise is to banks versus remittance companies, even though they are compared mostly to remittance companies. This is mainly due to the increasing deposits that customers leave in their Wise account. As of their latest earnings, their deposits are already at a solid $30.69 billion, while their market cap sits at about $18.21 billion. This shows that the trust that the company has built with their customers as they prefer to keep a portion of their funds with Wise, while still boasting a growth rate of around 35.66%. This has helped their card revenue increase as well, as it is their largest growing revenue driver as of today. Additionally, Wise has implemented a 1% interest income revenue cap despite interest rates being much higher at currently 4.25%. This means that they are willing to use the remaining 3.25% to potentially enhance customer value rather than increasing their bottom line. Lastly, at their current size, they are almost as efficient as one of the largest banks in America, JP Morgan. As for the remittance comparison, you can see that even though Wise is not the largest player in the industry, their efficient business model allows them to compete effectively. They are already operating at almost twice the efficiency as seen with their operating ratio versus other remittance companies. Also, it should be noted that Western Union may seem very efficient and undervalued as well, but their declining transaction volume and need of debt leads me to question if their future earning power is still intact. Lastly, I would like to emphasize their unique position as their transaction and deposit growth can also come from competitors as they can easily benefit from Wise's business model. Because of all of these advantages, Wise is trading at a multiple that I personally am not easily comfortable with. This multiple shows that investors in the LSE see the value that the company can contribute to their industry. After completing my DCF, my comfort was not eased as the company does not have a lot of margin of safety at current prices, but their business model and counter positioning makes it very compelling for me to purchase the stock. And so I still did. But before purchasing the stock, as I did not have a lot of margin of safety, I had to do more research into whether or not the company can keep their future earning power. As I do believe their business model is already sustainable due to their focus on profitable businesses only, I would also have to rely on their report to justify if top management is of high quality. What eased my mind is their focus on enhancing customer value through lower fees and convenience. To do this, Wise connects directly to payment systems of central banks. They've already connected to the payment systems of the UK, Europe, Australia, Singapore, Hungary, and the Philippines, and are currently processing connections for Japan and Brazil. Here are a few examples of the benefits of connecting to central bank payment systems. In the UK, British pound transfer fees were reduced by 20%. In Hungary, Hungarian forint transfer fees were reduced by 15%. And in the Philippines, Wise's internal fee was reduced by around 9 times. To continue their commitment to this, they have initiated their application to become a national trust bank in the USA, with the purpose of connecting to their payment system called FedNow. This could potentially be a huge development as 48% of their cross-border payments are already in US dollars. This could potentially boost gross margins, but to note, I did not use this boost factor in my intrinsic value computation as I prefer to stay conservative in my estimates. As they are continuing to focus on their flywheel, I had the confidence to buy the company. I've only bought the company once so far, which gives me a cost basis of 11.34 pence. But if the opportunity arises, I will be purchasing more shares of the company as long as it stays within my fair value estimates. As you can see, even if stablecoins are the talk of the town right now, doing a deep dive into the industry, the companies involved, and top management will give you invaluable insights on whether or not all hype or something that is ready to change the world. To end this analysis, I'd like to quote Charlie once again. You don't have to be brilliant, only a little bit wiser than the other guy on average for a long, long time. Thank you so much for listening to my analysis. For those who are curious about my portfolio updates and changes, please don't forget to like, comment, and subscribe. I will be doing this for future videos as well. Thank you so much.